Hello everyone and welcome to this live intraday strategy webinar on SB Trade Desk. Good morning to everyone in the room. Mark, Petro, Pooja, Tiffany, the whole team's here. Good to be with you here today, guys. Nice lesson on opening ranges. There's been a couple of nice opening range breaks. I highlighted 3 of them last night on the Squawk feed. So we'll take a look at those. Feel free to throw out any questions, trade setups, specific pairs you guys are looking at. Be more than happy to take some on-the-fly analysis for you guys if there are specific trades you are looking at. Petro, thank you for that. Eileen, good morning to you as well. Great to see you. We'll start off with the dollar-yen. I have a couple of questions here in the dollar-yen from Petro and Pooja earlier before we started the session, and then we'll jump into the featured scalps that are on the intraday page. So first things first, for the dollar-yen, Petro was noting earlier ahead of the open on the US dollar 30-minute, there's a trigger, or there is divergence rather on the 30-minute with a trigger. Is it worth a small short? So one thing I just wanted to remind you, Petro, is we never want to take a trade just based on the oscillator alone, right? So the RSI signature in and of itself is not going to be a strategy. It's when that RSI signature coincides with a break in price. So a trigger break in the momentum signature will never put me into a trade just purely based on that. Now I happen to like the idea, having said that, just because we are in a pretty big range. 119.75, 119.87 is a region we've been talking about. The targets have now been hit for the dollar-yen long on the swing side. So if you guys have been on the swing trade, entry from 118.46, that target was hit earlier today at 119.80. And you could see a little bit pullback here. Petro, I'm on that with you, but we don't quite have the trigger yet. And we're just opening up the U.S. opening range. So we'll keep that in mind. The U.S. opening range, at least so far, the low, you can basically look at 119.70, 119.65, this region right here, downside break with momentum signature turnover, would look for a target right back at pitchfork support or this median, or this extension here, 786 at 119.23. Nice pivot there is the opening range high for the week. And then we defended it yesterday on the rebound. Now, Pooja grabbed a nice chunk here, says, good morning, Mike. Jumped into a dollar-yen long on a retest of the weekly opening range high during the U.S. session yesterday. 44 pips this morning, followed your strategy to the letter, and it worked. Smiley face. Well done, Pooja. Again, I'm just highlighting the levels. You're the one making the trade, so very, very nice. And that's a really good way to play it. So Pooja took a long right here on the break of the weekly opening range. Now, the trigger here that I would have been looking at was simply a break above 70. And contrary to popular belief, guys, of, something's overbought, you got to sell it, in near-term price action, the breach above 70 means that that's when the market has the most push. So for a very near-term strategy, a scalping strategy like ours, we don't necessarily need to worry that it's an overbought territory and have to sell, right? In fact, that break into overbought territory typically can be a nice trigger for the entry. One thing I do want to note is it's a little bit harder, guys, to always buy a break of resistance and sell a break of support. Why? Very simple. Your stop typically in that type of scenario will not be as effective. But when you get a break of the opening range or you get a push into overbought, a lot of times that's worth the stab. Pooja today locking 44 pips on that rally. Very nice, Pooja. So guys, watch 119.75, 119.87 actually completes an exact 100% extension off the lows for the month and for the year. And at this point, I wouldn't be surprised if we do see a little bit of a turnover here. And I'm with you, Petro. We'll need to see that trigger break accompanied with a break of the opening range low, at least for the U.S. Session here, before I try to fight the trend. Remember, always keep in mind the relative performance of the trades that we're looking at. Okay, and again, just a quick snapshot. I know a lot of you like to look at these performance gauges. So here's what the relative performance of the U.S. dollar looks like so far today, okay, from yesterday's close. You have the Japanese yen, which is the second worst performer on the session. So before I try to take a stab to fade that weakness, Petro, I'm going to want to see price turnover with a signal in price action as well, not just the oscillator. Does that make sense? Good morning, man. Great to see you. Petro says great with a smiley face. I'm assuming we're on the same page then. Right on. So dollar yen, very interesting here. Again, to bring your attention to the daily chart, this thing is such a crowded trade, guys. There's so much interest in it. Before, I was talking with Jamie about this for a while yesterday, before we start looking full-on resumption, okay, of the broader uptrend that has been in effect, obviously, for a couple of years now, you know, this is the king of the fake-outs, guys. So I wouldn't be surprised if you make a stretch into 120.20. That's the major resistance that we're looking at above this region, and then a quick jackknife to the bottom before you start to see some strength again. So we'll look to see how the U.S. Open pans out. At this point, swing trades are already out at 118.90. And again, I'll be looking to see if we can find some near-term short triggers here on the turnaround. All right. Any questions on dollar yen before we move off? As a quick reminder, tonight you do have some data from Japan at 18:50 Eastern. You're looking for machine orders for the month of December. Looking for a nice build of 2.3% from 1.3. So we'll look for that later in Asia session. Okay, so let's jump into the highlighted pairs. Looks like a five-wave move from early February in dollar yen, says Pooja. From early February. Could be a 1-2 extended 3 or longest wave, 4 or 5. Could be, and a nice turnaround from there. Absolutely. In fact, most of the rallies, I would say, since the low that we made for the year, Pooja, have looked like in 5 waves. This looks like 5 waves to me. 1, 2, 3, 4, 5. Correction. So, you know, we could be setting up for a near-term correction here before resumption of the broader trend, and that sort of falls in line, Pooja, with what we just kind of, or what our expectations are near-term, right? Maybe see the strength in dollar yen fizzle around here. Near-term correction is to be bought as long as you stay above 118.80, 118.90, this region here. So could be the game plan here, for sure. One other thing I do want to note is on an objective basis, you know, playing with these opening ranges. Don't fall in love with the opening range break. So the opening range did break for the week to the upside. You could get a high today. You could get a high tomorrow. Okay, a lot of those times those opening ranges will stretch into a Thursday, Friday high or a Thursday high. Then you see some weakness into the end of the week. You know, I just don't want to jump onto the short based purely that we're at resistance. I need to see that trigger for the scalps to come into play. All right. Even if you look at this, well, let's take a segue into the Aussie dollar. Another one that wasn't really highlighted on the scalp reports, but I didn't want to, you know, be redundant. I know that the shorts are already in play from the swing trade, so I did put out this tweet yesterday for the Aussie dollar. Where was it? Right here. Really nice, a really nice, perfect example of how to play the opening ranges, guys. So last night, I can't remember, I think this was about 10 o'clock, 10:30 at night. We were just an hour or two into the Asia Pac session. The opening range was very clear. I highlighted it with this box right here. The opening range low came right below 77.70, was 77.60, I think, or 63. The high came just shy of 78, and you're waiting for a break of this range, okay? The opening range for the month, or for the week rather, for Aussie dollar was still intact, guys. So really the downside break was testing a break of the weekly opening range. Well, inevitably you did see that downside break, 77.50, which was the opening range low for the week, and that 50% retracement the advance gave out. And the initial target that we were talking about yesterday here in the webinar at 77.11, 77.12, right in 77.20, got a perfect tag. So while we circled this here, it happened a couple hours later. But it was accompanied by a trigger break in momentum and a really nice setup, a perfect example of how you want to play these intraday opening range breaks. So here's what the Aussie looks like now. All right, so very clear cut. I don't know how much you want me guys to go over this one, but again, you know, there is the opening range break. Even if it gets messy, guys, you got a candle close below. The momentum signature had already given the signal. Okay, your stop is against the opening range high, which wasn't far at all, 77.90. You're looking for 28 pips. Okay, the initial obstacle was going to be the opening range low, but again, that break, okay, as you headed into that 77.50 region, coincided with a break sub 40. Okay, and that's the hold initial target right here, triggered a little bit later than we wanted to. All right, so Pooja says that makes sense. Right on, Pooja. Thanks for that. Any other questions on the Aussie, guys? So at this point, below 77.50, objectively, you want to stay bearish. It's the opening range low for the week. We broke that. The only thing that would put us back on the constructive side would be a break above the upper median line parallel. Okay. Now, inevitably, a deeper pull here into like 76.85, specifically 76.60. I do think we look to buy, specifically if that coincides with the median line. So if we head into this region tonight, okay, into European Open, to the close of Asia, this would probably, or at least in my mind, be an area of which I want to start looking higher for the Aussie. Okay, remember the actual, I think Jamie is also looking for long exposure. Let me see what he wants. He's looking for long exposure near 76.60, 76.80. Oh, great. So right same levels. So he's looking in this region for entry, what I just highlighted. And I think we're on the same page with that. Okay, again, objectively speaking, Aussie dollar has yet to clear the monthly opening range. So before we fall in love with any broader directional bias, any medium-term trades, you know, we want to see a break of that monthly opening range, which remains pretty tight and intact. Yesterday's move breaking the weekly opening range, and near term below 77.50 will look lower. Questions on Aussie? We can actually clean this up here and add some near-term triggers in play from the weekly high. By the way, this was actually a really good trigger here too yesterday, guys, on the entry that the swing trades took. Divergence into the highs, trigger break. You got that on the break there. Stop against the highs for the weekly opening range, which happens to be above the formation. Looking for 28 pips per scalp. Really nice plays. So the Aussie is in focus here on the intraday. Isn't the Aussie jobs number tonight? Dale, you're absolutely right. You took the words right out of my mouth. The Aussie job numbers, guys, is tonight. Those are going to be likely market mover here for the Aussie. We're expecting a decline in the broader employment by about 5,000. Remember, last month we got 37.4 thousand. Here's what it looks like for the Aussie data tonight. Okay, so we're expecting employment change. We're expecting a decline of about 5,000 jobs off of 37. Unemployment rate is expected to uptick by 0.1%. Remember, you're not trading the number when you're trading these announcements. You are trading the deviation off of the expectation. So if we get a 6.2%, don't sell the Aussie because unemployment uptick. That's the expectation. Okay? If it uptakes to 6.3%, now we're talking about a tradable event. If it holds at 6.1%, now we're talking about a tradable event. But we're always trading the deviation off of the expectation, not the print. So we want to keep that in mind when we're heading into these event risks later tonight. And certainly I think we could get some plays here for the Aus. All right. So heading into Asia Pac, we'll be looking for those numbers. Another trade that I highlighted yesterday on Daily FX, I did want to just go over with you guys, was the Aussie Cad. Doesn't really have any plays yet. It's been kind of frustrating. It looked like it broke the opening range high for the week. We've stalled since then, and it hasn't invalidated anything, but certainly hasn't offered much opportunity. So here's what the intraday chart last night looked like for Aussie Cad. Okay, so we highlighted that it looked like we had broken the opening range high for the week. This was the highest momentum break that you saw. We were holding 40 all week long, and certainly the trendline resistance here, just the near-term trendline resistance break, had us looking higher. Targets at 98.35, targets at 98.64, a little bit more of a key threshold here as it coincides with the January trend line. We highlighted last night on Twitter the opening range for Aussie Cad for the Asia Pac session. The break happened but didn't materialize into much. Here's what the chart looks like for Aussie Cad. You know, you did inevitably get a downside break, and you're looking for 34 pips. You actually would have just achieved those 34 pips, but you know there wasn't really much of a trigger in momentum as you broke the opening range. In fact, on the break of the opening range, momentum came right into 50 and held. That's not something I'm going to be comfortable with. The only thing I want to point out to you, and it's real subtle, is this. This trend line here is a simple mirror of this formation here. okay, which we were trading in all the last couple of weeks there. So if you mirrored that to the high of February, you can see that break, support, 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 support. So we're still not invalidating the upside bias, guys. As I said in the report, the invalidation level was actually 97.50. We went for a tag of that exactly a couple hours into the European trade session here, and we're off those levels. At the end of the day, I want to see a break above the Asia Pac range. I want to see a break above 98. Okay, it is a healthy range scalp. Got about 35 pips. So if you do see that pop there, you're looking for 98.35. You're looking for 98.60. Like I said, watch that trend line from the January high. But a break below 97.50 puts us neutral, okay, with really only a break below 97, putting me back on the bearish camp for Aussie Cad. Remember the daily chart, guys. This is a huge support level that we rebounded off of last week. Excuse me. My favorite setups, you hear me say it all the time, 100 off the high, 618 off the low, or vice versa. Typically very, very big ranges. Add to that you had that former trendline resistance, now support. So I do think you get a launch into 98.35 at some point. You know, I'm just not really crazy about the CAD in this pair, not necessarily worried about the Aussie. Even if the Aussie does experience those near-term losses versus the dollar, we're going to need to rely on CAD weakness here to get this thing going. But in any event, guys, the invalidation level is very close at 97.50. So, you know, work with this as you see fit. Still looking higher while above that region. By the way, 97.50 is not a random number. It's the close that we made for the week last week. And certainly we gapped into the open. We filled that 97.50 threshold. As long as we stay above that, you know, I'll favor the long side. So, looks like we actually might have a trigger coming up here soon as well. Even if we get this trigger break, we're going to want to vault through 97.85. See if we can get that that run. As it stands right now, and this is a nice exercise right here as well, this is the new opening range we're going to highlight, and it's the European opening range, right into our invalidation level. So very, very clean setup, actually. Here's your European open. There's the low that we made so far in European trade. It is the invalidation level at 97.50. Topside break above the European highs, and you're looking for that run into 98.35. Questions on Aussie Cad? Okay, so onwards to the British pound. Another perfect opening range play. The opening range for the session was a trickster last night, and I'll show you how that panned out. You actually did get an opening range break to the downside. So on Twitter again last night, highlighting the British pound opening range was taking place just below resistance. Okay, this is from the SB Squawk handle yesterday, guys. So 52.70 into 52.65 resistance region. Here's the weekly open. So it's the weekly opening range high too. You had a very clean opening range here as you opened up Asia Pac. It broke to the downside. It gave you a play. Okay, I don't know if it extended the full 30 pips. You know, I wasn't really awake for this move here, but it did break to the downside before completely reversing and launching right through the highs. What does that mean? You get opening range reversals all the time, specifically on the British pound. This thing is notorious, guys, for the overthrow, meaning you're coming into resistance, you overthrow that region, then you come back. It's notorious for the piercing of major key levels, trend lines, moving averages, pivots, and then reversing. So you got to be very, very nimble with the pound. It's often referred to as the professional market. But here's what the pound looks like right now. So remember, we're actually looking for the short side opening the week. Start off the week, we're looking for the short side of the pound. The momentum turnover late last week took us sub 40 for the first time since the start. Every rally has been held at 60. There's the break of the Asia opening range, okay, as per that tweet from last night. Broke to the downside, went from 52.50 into 52.30, okay. So you basically got 20 pips to the downside, you're looking for 30. Once this thing vaults and breaks back above the opening range, you're neutral. Clearing the Asia Pac opening range here at 4 a.m., a couple hours into European trade, puts you constructive. Okay, puts you constructive. It's a clear of the weekly opening range. It's the first 60 break in momentum you've seen this week. And you took out the Asia Pac opening range. So it's not always going to work. And when it doesn't, we have a quick way of ejecting the trade, getting out of there real quick. You had a lot of reasons to doubt that position once it came back into the opening range, specifically with the momentum turnaround at the same trend line support we've been waiting to break all week. And then the 60 break certainly would have taken me right out of that position. Okay? Near-term resistance, 53.20. I still think you could get a move into that region. You're constructive above here anyway. A break back below 52.70 puts you in neutral. And again, we need to see this trend line break, median line parallel. We need to see the weekly opening range give out 52 to really get the validation. I can tell you that both me and Jamie are stalking the shorts here like no one's business. So we'll try to keep you updated on the SB Squawk. But I do think you probably get a push higher here that you can sell for the British pound. Remember, here's what the daily chart looks like. Always keep in mind the broader picture. Okay? You're really not in any concern of any type of major breakout below 53.20. So into that region, the possibility still stands for a turnaround here in the pound. So the three opening ranges we just looked at, two of them worked really well. Aussie, dollar, yen, beautiful opening ranges. The sterling, not so much. And one other thing I do want to note, guys, just as a quick thing I've noticed, over the years, when you're trading the session opening ranges, each currency will actually have a stronger session opening range, meaning the Aussie opening range for Asia Pac is going to be the largest, the most important one for the day, because it's their market, it's their currency. The dollar yen opening range heading into Japanese hours, that's going to be the strongest range for that pair, right? Euro dollar, dollar CAD, British pound, these two will tend to work pretty well both on the U.S. and European opening ranges. But just something to keep in mind for that strategy. Pooja says, what trigger would you use for the sterling dollar shorts? Also, wait out tomorrow's event risk. So tomorrow you do have a quarterly inflation report from UK. Can be a pretty big mover. In fact, those quarterly inflation reports sometimes can be a bigger mover than the actual CPI print. So I would wait to start to try to short that till tomorrow, Pooja. Again, remember, we always want to take a step back and just objectively look at it. The British pound broke the opening range to the week to the upside. So right off the bat, I should be kind of really wary of trying to short it. Second of all, you have major event risk on tap. You're absolutely right, Pooja. So that could be the catalyst on a Thursday to give us a spike into a Thursday high that we can sell, right? With the same respect, let's say I don't even get any positions on this. Who knows? Tomorrow's quarterly inflation report can take us right through the opening range low for the week, and that validates the bias. So keep that in mind. I wouldn't necessarily be looking at a trigger for the short, Pooja, but if I did, it's the same one we've been looking at since the start of the week. You got a false break there real quick yesterday, but in any event, 1, 2, 3, 4. If you don't want to count that, you don't have to. 5 tags of this slope line, and that gives us validation of using this as a trigger. So it's far away from where we are right now. We're above the opening range high. I'm not really necessarily looking for short triggers at this juncture. Pooja, are you with me? Let me know if that makes sense. Yes, thanks very much. Right on. All right. So, the British pound. Okay. Euro Aus. So, here's what the Euro Aus looked like as we headed into the close of U.S. trade yesterday. I'm sorry, I think this was updated last night. Yeah, this is last night about 10 p.m. So, what I want to highlight is this real quick, guys. The opening range for the week is still intact. And again, the one problem or the one caveat with trading the really near-term strategy with opening ranges and such, guys, is that sometimes, the opening range for the week won't even pan out till Thursday. And it's a waiting game. And that's all it is. It's a patience type of trade. We're not trading with 50, 60, 70 pip losses where we can sort of finesse the levels and kind of just wait the trade out. We really need to be a little bit more meticulous. On a strategy like this, guys, more than anything, the best type of risk management is a proper entry. Okay, so I really caution you, especially in these conditions when you're looking at a pair that's kind of really struggling to make a reversal, essentially. You want to wait for that clarity. So for the Euro Aus, where art thou, Euro Aus? There it is. Okay. We noted on Tuesday, or no, on Monday. So first of all, Monday's webinar, you guys remember, for those of you who are on Daily Effects webinar, we were talking about this trigger break here, this being a great opportunity. As we opened up the week, even on the SB note, guys, to start off the week, we were looking, okay, for a pullback to buy, okay? And essentially, early in the week, that pullback materialized right on the Monday session. This thing came right into the support structure at 44.30. Nice long trigger there, got us into the longs. We closed out the session for the update on Tuesday. Yesterday was Tuesday. I keep saying Tuesday. On Monday afternoon, as we held 145.33 again on Monday afternoon. Looking to buy dips while within the weekly opening range, okay? As we come off of this near-term resistance, you got the pullback, 40 held. There was a nice trigger resistance here on the 5-minute, put us back on the long side. First target, 45.30, same target here. The second target, as I noted in yesterday's report, just missed on this turnover here, turned around right ahead of 46.15, which is the objective target. So we were still, you're still holding positions here. If anything, you bring your stops up, and if you brought your stops up just below that level, guys, do you see how clean this is? And inevitably, the Asia Pac opening range breaks to the upside and gets you that objective target. Okay, momentum structure signature still looks pretty constructive. Okay, 60 break, 50 hold. That's even stronger, okay, than a 40 bounce, and a 60 break here again. On the broader picture for the Euro Aus, here's what the daily chart looks like. 46.50 rather is really the breakout of which we'd start to really favor a little bit more of a broader upside play here. Remember, this was the invalidation level to open up February trade. You had the 200-day moving average, which has acted as a very nice clear pivot in price. You had a 38.2 of the decline, okay? And while you did spike a couple days below, on a closed basis, you respected that support level. 50 on momentum on the daily chart, still support. We're still only looking for a stretch into that 46.50 here for now. So for the Euro Aus, no change. Okay, no change. We're still favoring topside bias. If this break is legit, this is a break of the objective weekly opening range. Weekly opening range low, weekly opening range high. As long as you stay above this, you continue to favor the long side of the trade. Okay, which coincides with that last push lower that we're looking for in Aussie to give us, this pop up here into 47.50 near term. Questions on Euro Aus before we move off? Okay. Okay. We went over Aussie Cad, Aussie Dollar, Euro, Aus, Sterling, and Gold. I just did a quick note here, guys. I didn't really want to spend too much time talking about this last night. Listen, you're only waiting for one simple thing. It's such a, what's the word? Typical trade for gold. Okay, typical gold. You make a move into major resistance, you sit there for a little while before you make the turn, and you get a lot of people getting chopped up right here. 12.30 into 12.20, we're going to reserve that 10-pip range as the bullish invalidation level near term until that breaks. The short side is not confirmed, okay, is not confirmed. In fact, if anything, in my mind, near term, this looks like a correction. 1, 2, 3, exact 100% extension. Lower median line parallel. Longer term, median line off the 2013 levels, okay, there's a lot there. All right, there's a lot there. So shorts are at risk above this region. I don't necessarily want to advocate the long side yet. You don't necessarily have any triggers that are pending real near term to get you on the long side. But anyone who's trading on the short side of gold, guys, you know, don't buy into all the hype. The dollar index is still at resistance, and the same setup that we highlighted on the report on Monday on Daily FX is in play, guys. You know, longs are at risk for the dollar, sub 11,850. Shorts are at risk for gold, above 1230, 1220. Okay. Now, whether that materializes into a bounce here and a correction in the dollar, we don't have that signal yet, but certainly we'll be watching that near term. DB says, agree with you 100% on gold, Mike. Appreciate that, DB. I mean, for me, you know, guys, if you've been following the gold reports, this has been, you know, a very clean-cut trade, in my humble opinion. I just, it's beautiful when an asset reacts like this to the analysis that you've laid out, and just the sheer clarity of the levels that we've been playing off of has been very, very reaffirming. So watch that 1230, 1220 region of support near term. Like I said in the report, guys, on SB on Tuesday, you know, really you need to see a break above the 200-day moving average, this region right here, to get back on the constructive side, or at least to alleviate, you know, that downside. We'll call that the bearish invalidation level near term. All right. Gert says driver on the 30-minute and 240-minute on gold. I'm not sure what you mean by that, Gert. Driver on the 30-minute and 240 on gold. Give me some more information on that. Maybe I'm just reading it wrong. Will says, hi, Michael. Just signed up yesterday. Hello, team. Will, welcome aboard. Great to see you in the room. Hey, man, this is a free-for-all here. There's no faux pas. You can ask any questions that you have on any specific strategies or specific pairs, rather, that you guys are trading. Will, welcome aboard, man. It's great to see you here. So that's the gold trade. So, guys, those are the setups I'm personally following. Those are the ones that are highlighted on the intraday page. I do want to open the floor up to your questions if there are any pairs or specific things that you are looking at. I did want to take a quick segue and look at crude. For those of you who are trading CFDs or on that side of the market, guys, really another asset that I think, you know, isn't warranted. All the confusion that you're hearing online and on CNBC and Bloomberg, and oh my God, you know, oil prices are so unpredictable and sporadic. I humbly disagree. I humbly disagree. In fact, this has been not quite as clean as gold, but certainly the levels have been, you know, very well respected by price action so far. So if you guys remember, it was me early in 2015, January on the 4th, who was calling, you know, a major key support level for 47 into 47.70 for crude. Obviously, we dipped down way beyond that. Okay, we got into the 143, into the 43 handle before turning around at the start of February. Long story short, guess what the opening range low is now for the month? Stop traffic. It's 47 into 47.70 again. Okay, so the same level that we were looking at to open up the year is now the opening range low for the month. And a formation off that gave us a support structure here that we were looking at into the close of trade yesterday. So you might have seen a tweet from me last night highlighting this chart, okay, which was a 30-minute chart of crude. Okay, we actually tacked this on here yesterday in the webinar together, if you guys remember. There it was. Okay, very clean break. Let me clean up the momentum signature here for you real quick. All right, so on that break that you saw below the lower median line parallel formation was the first dip of 60 that we've seen for the week. So here's the weekly open. So the weekly open, you bounce off 50, still constructive. You make a new high, okay? That high struggles to hold 60. The 50 break right off the bat puts you on the assertive position, okay? On the way up, 60 holding resistance. The break below 40 coincides with the break below the lower median line parallel. All right, so remember, the opening range for the month is still right here, okay? 47 into 54, we're going to call it. That's the opening range for the month. Inevitably, that's the break, okay? You'll look to play as we get deeper into February trade. as it stands right now within this range, you just want to be using your momentum triggers and near-term price action. If you're wondering, hey, Mike, what the hell is that orange line, just a random skew there that's catching the lows, this is actually another pitchfork. I wanted to clean up the chart, so I didn't leave it on there. But if you take a pitchfork, guys, off the lows that you made for January, okay, all right, you can see that that pitchfork has been encompassing price action pretty nicely. Take a mirror or a parallel of that same slope and attach it to the lows, and you can see that that near term is catching the low as we speak. Okay, remember, we're just trying to find the slope, okay, the gradient the market's following. And if you extrapolate that off of key lows, key highs, a lot of times they'll offer some nice support and resistance. So near term, I do think, you could see a bounce here in crude. At the end of the day, you really need to see a 54 break here to get the validation for a medium-term bias. That being said, momentum signature giving divergence into the lows. Price action, lower low, oscillator higher low, trigger, pending and ready to go. 9 times out of 10, I'll take these positions. Divergence into the low with a trigger break, or divergence into the high with a support trigger break. These tend to be great positions. Okay. If this does materialize and the opening range breaks to the upside and you are on the long side of the trade, guys, your stop should be just below this region, and your limits should not be above 53. Okay, they should be inside. And specifically when I'm trading commodities, guys, all my limits for these are always going to be on the inside. Meaning if I'm looking for a stretch into 53.90, my stop's probably at 53. If I'm looking for a stretch into 47, my stop's probably at 47.70. Okay, you want to stay on the inside. I'd rather lose and forego some pip profits, but make sure I get executed. So a little food for thought there. Keep in mind also that the momentum signature has turned over here. So this is a change in behavior. A lot of times you'll hear Jamie say, right? And as such, while this trigger break here might give us a nice bounce, this is going to be counted as counter trend. So if we do take this long here, guys, you want to make sure if we get the trigger break that you're trading, a third, a half of what you typically do. We don't talk enough about these webinars, guys, about being dynamic with your trading size. That's something I really can't help you with. You guys really need to know what your risk tolerance is. On counter trend trades, you'll hear me say it all the time, you got to be more nimble. So I'm trading, half my typical trade allottage per scalp when we're trading with the trend, or once we're trading post a monthly or a weekly opening range break. Those trades will be full allottage for the size. So make sure that you're also being dynamic if you're intraday trading with your trade sizes. All right, so Brian C. here says, I'm thinking about a long euro at 113 for a possible long. Thoughts? Thanks. Brian, let's take a look on the euro. We haven't taken a look at that at all today. Yeah, right. So Gert says, cheers, Mike, got to go see you tomorrow. Appreciate that, Gert. Have a great day, man. I'll see you then. So Brian, I don't see a purpose in doing that until the opening range break. Look how ridiculously tight this week has been, guys. Do you see this? I do agree with you that, in my humble opinion, the next move is probably going to be a nice little near-term rally. Am I willing to put my money on that here? Not so much. Okay, not so much. So before I jump into the intraday chart on this one, Brian. Remember where we are in the broader text, okay? The opening range for the month is being tested here. You're at the lows. So with that respect, Brian, you're on the right side, I think, as far as bias is concerned, because you're at the monthly opening range low. If you guys remember, on the Sunday open for the 26th, I gave out a tweet as we were heading into 110.95, which is a long-dated 100% extension off the 2011 high, and that was the low. I didn't know that was going to be the low, but it was the low, right? So the rebound here is begging correction. I'd rather see a break of the weekly opening range and attack this trend line than just take a long from here. You're looking at 113 for a possible long, so a little bit lower from where we are. Let's check out the intraday chart. So the daily. So what I wanted to just highlight is the range that you're in. So even if the opening range breaks to the downside, be mindful of that 112 region. Nice confluence there. This is a 618 retracement, so it is a key retracement. Okay, and in fact, by the way, this dates all the way back to the 2001 low. In fact, if you look at this trade, guys, on a closed basis, didn't really invalidate that region. Okay, remember, you had the lower median line parallel in there too. On a closed basis, we didn't really invalidate it. Check it. Here's what the line chart looks like. Okay? Makes sense, guys? So I'm a little, I do like the rebound idea, and Brian, I'm 100% with you. The timing for the entry, I'm not quite sure we're there yet. So I just wanted to show you that on the daily chart to show you the key levels I'm looking at on the support side. That would put me back on the shorts. The only thing would have to be a move below that 1095 level. Now on the intraday for euro dollar, here's what we're looking at as we continue to trade within the weekly opening range. All right. You know, it's just not my cup of tea here, Brian. It's just not my cup of tea. I'd rather, you know, try to press the euro Aus, if anything, as that is challenging the opening range high at least. But right here, you're right at Friday's close, unchanged on the week, unchanged on the week. So despite the headlines and Greece is gonna, you know, erupt into chaos and all the nonsense that you see on TV, euro is unchanged on the week. All right, so call it what you will. I'm gonna follow the technicals here. The momentum signature is not really constructive at this point. I can't say it's bearish either because you did see a 40 bounce and we're just straddling the 50 level. Brian, we could see this move a little bit more sideways before it starts to move. But for me, man, the 113.50 break is what puts me on a more constructive play. In fact, let me just say this. Even if it breaks the upper median line parallel, that might be a play. You know, eventually we'll be looking for a move into the upper median line parallel. But even if you break the median line here, that might be a trigger. But my point is, I don't have anything here to put me into a trade. So I'm with you. I think the next move is higher. You know, but for me, I can't just take a long based on purely a price play. Brian, does that make sense? He says, cool. I was looking for a possible shift pitchfork from the low on the 4 hour. Let's take a look. What's the low reference points? Give me the days, Brian. Let me see. Maybe you're looking at something that I should be looking at. Who knows? You doing something like this? Take 50% time and price. Could be. Sure, could be a play. Here's the thing I want to say to you, Brian. And this is, you know, something great that you always want to keep in mind, guys, whenever you're doing technical analysis. It doesn't matter if what you're looking at is a support, a fib, a trend line. As long as there's something there that we're both looking at, we're on the same track. And for me and you, Brian, you know, that slope is coming right around here. Man, that's the opening range low for the week. So either way, you know, we're looking at the same thing here, Brian. You know, in my humble opinion, the near-term support you really need to focus on, even more so than 113, is this 112.70 level, especially because it's the 618, and the sheer pivots that we've seen here since the start of the month, since the start of the year, have been pretty impressive. So does that make sense, Bri? He says, yep, thanks, right on, right on. And you know, just add some flavor here. As far as data, if we're looking for data that could give us a catalyst here, you do have tomorrow industrial production figures out of the Eurozone. GDP on the 13th, Friday the 13th. Always like those Friday the 13th trade sessions. So guys, as a disclaimer, actually, I'll actually be out Thursday and Friday. Tomorrow I will be doing the webinar, so we'll have that webinar tomorrow morning at regular scheduled time. But I'll be traveling for some festivities into the end of the week here. But on the 13th, my point being, we do have the GDP release from the broader Eurozone. The advanced read for the fourth quarter looks for a print of 0.2% and 0.8. It's not likely going to be a major market mover, guys, because there's no deviation. So where's my snippet tool? So again, if you look at the data, the block for Eurozone, we're really expecting a hold of what the previous estimates were. Okay, so outside of a deviation, excuse me, there, I don't expect we'll get much out of that read. If you look at the German event risk, I think that one's a little bit more important at this point. So here's what Germany's economic docket looks like. You have CPI on tap tomorrow on the 13th. You have German GDP as well. That is expected to actually shave off a few off of the preliminary for the fourth quarter. Okay, from 1.2, we're expecting a drop into 1.0 for the year-on-year print. So keep your eyes peeled towards the end of the week. Thursday, Friday is my point, as we get into some data out of the Eurozone that could finally give us a break in this weekly opening range. I mean, when things coil up like this, guys, in my personal experience, it's been prudent just to stay aside, wait for the break. You know, we'll get that play. We'll get that play. Announcement on Greece. Talks 7 p.m. today, I think. Announcement on Greek talks. I'm sorry, Alex. Thanks for that. We'll be hearing for those types of releases, guys. We can't really plan a trade around it, right? Because the devil's in the details. We don't know when the information will be disseminated, how it will be disseminated, what the initial reaction will be. I don't trade event risk like, you know, talks or, you know, announcements or things of this nature. If it's not a print, a monetary policy report, for me, it's just not on the menu. Jay Jackson and Adrius, what's up? Both of you are looking at Sterling Oz. Let's take a look. Jay saying, did you cover Sterling Oz? Broke weekly opening range during the Euro session, now consolidating above the R1. Jay, let's take a look at Sterling Oz. Ah, right. Huge region. Huge region. I really can't stress it. Massive region of resistance here. I've been watching this region since the start of the year. This is going to be the 100% extension, okay, off of the ascent off the 2013 low, which was a multi-year low, the exact 100% extension, 97.50, and the current operative upper median line parallel. Okay, both of them coincide right there. So if we close above 97.50, we could see some serious upside here. We can see some serious upside here. Despite the massive losses that you saw in the pound last year, you know, this momentum signature has been very constructive since September. Went from straight sub 30 to above 60. 50 break, 60 hold rather, 70 test, 60 hold, 70 test. I mean, this is the exact range of where you'd expect to see a bull market momentum signature, is 40 and up. And that's been in play since the low in September. So I do like the upside if we close above this region. Let's see what the scalp looks like near term. Here's your weekly open. You're absolutely right. We just broke the weekly opening range. Let's dress this chart. Give me a few seconds here, Jay. Typically, I like to take my triggers from the low in price, so I'm going to also draw this one as where we'd want to invalidate that near-term long side bias. And we'll need to rework these levels, so just bear with me one moment. Wow. Okay. So I don't have any scalp targets. Okay. It is a huge range scalp, a 266 pip daily ATR. So there is room. I don't have any scalp targets, guys, because the last time price action was in this region was back in 2008 or 2009, early 2009. My point being is this: when we come into regions where previous price action is way, a couple of years out, it becomes very difficult for us to map out near-term objectives. And when price is on a steady one-stream level like this, you don't really have many high lows. You don't really have many places to take your extensions and retracements. So I'm going to be working with these levels. And in fact, that 202 region becomes massively important in that it represents the 2008 lows. If you guys come here, here's a 2008 low right towards the end of the year, right on the cusp of that December 29th close. See that? Exactly at the 1618. And that's 202.30 or so, 202 we'll call it. 97.50 was big, guys, and there's really not much in between here that I would be scalping. So Adrius and Jay, I'll need some price action to develop so I can get some high lows, some regions to take my extensions off of. From now, the only thing I'd be looking at is this. That comes right essentially at 201. This is a mirror or a copy of the slope of the ascent here from 2013. So if we get some symmetry, that could give us a high right at 2, and then 202.30 is going to be massive. It's going to be massive. Interestingly enough, this move right here, Adrius and Jay, is not just a break of the opening range for the week, guys. It's a break of the monthly opening range. Do you see here's the monthly open? Can you guys see these lines? They're pretty, I keep them light just so the charts don't get ridiculous, but here's the monthly open February 1st. Look what happened on February 3rd. We stretched right into this high, and that's the opening range high for the week. So for me, if we close above 97.50, it's a monthly opening range break. In such a scenario, you would look for that late month high. That being said, near-term price action, from a scalp perspective, guys, I just don't have it. I'm sorry, I just don't have the levels that I can trade with confidence. For me, this is sort of a near-term trade, a medium-term trade that you want to take. I don't think you necessarily scalp this pair at these levels. We've had tons of scalps on Sterling Oz, but not as we've come into fresh highs that we haven't seen in 4 or 5 years. That becomes a little bit more difficult. So I'll sit this one out, just noting a general upside bias for the week while above 19, let's call it 96, let's call it 96.80. A general upside bias while above that region. And, we'll see if we can get some highs and lows here to be able to take some extensions off of. But at this point, looks like we're making a pretty big break here. Jay and Adrius, I wish I could be more assistance for you on this one, but does that make sense? I know Adrius is on the same page. Says thanks. Yes, I see. And again, because it is the pound, and I'm just going to throw this out there as a disclaimer, I wouldn't be surprised if this thing, gives us a 100 pip rally from here and then jackknifes right below the opening range for the week. That would sort of coincide with the Aussie giving us that weaker pull into that support structure and then rebounding. And since we're looking for a high to sell in pound dollar, I'm a little bit at odds on how to play this one from here. Sometimes, come on. Okay. Well, look at that. What? How did that not show up on the daily chart? Oh, it's from the secondary advance from the November low. So this is actually pretty interesting, guys. Off the November low, there's 2 equal legs up while within the confines of this formation. Puts the 100 at exactly 97.80. We did not have that there. We did not have that there. Watch that region. Sometimes it pays just to take a second and recheck your levels. Adria says, I hear ya. I was curious. Thanks. Jay Jackson says, yes, I had 100% at 97.95. Jay should have said something. Yeah, I see it too. I see it too. My reference points are sloppy just because I'm trying to do this quick here, but I'm sure if I put that to the actual low, you'll get 97.90 exactly. Either way, nice little sneaky high that we didn't even know was there, right, Jay? Yeah, so it could be a classic sterling break. We just talked about this earlier today, right? Break of major trendline resistance, a break of a major fib, throw over, reversal, and then you get the mean correction before we start to turn higher again. The broader trade, in my humble opinion, still remains heavily weighted to the upside moving forward. At this juncture, yeah, I think it pays to take a side seat here for now. Yes, but hit, so I don't know what to do from here. Right, Jay? I'm right with you, man. I'm right with you. I would, that's okay. We can't always know what's going to happen in every single pair at this, at every point. I think this one, it pays to sit on the sidelines, especially if you were on the long side, Jay, and you just booked it. Sounds like you've been tracking this one. Great play. Great play. I just wouldn't really want to press it from here, especially on the long side from these levels. So we'll see with the BOE inflation report. Maybe that'll give you the kick that you want. And, oh, this is a double whammy, guys. So over the next 24 hours, Jay, he says, yes, booked it. Okay, thanks. Right on, sir. So over the next 24 hours, Jay, on this one, you have the Aussie employment later tonight. And then right on the back of that, you got the BOE inflation report tomorrow morning. So I think we'll revisit this in the webinar tomorrow and see how it's doing. Eileen and Tuttle, both your questions. Emil says, hello, Mike. I missed the beginning. Did you cover Aussie Cad? Yeah, we talked about it for a while, Emil, so I'll have this archived for you, brother. You can check that out at your leisure. Tuttle, good morning, Michael. Sterling Cad broke the monthly opening range yesterday. Yes, it did. Yes, it did. Another trade, very cautious of because of the fact that we're coming to these major key highs, but I'm going to need to see today's close. Excuse me. If we close above 92, that would be really constructive. Here's what the line chart looks like. Bring it into a line chart, guys. Just always be cognizant of what the real market is doing. And when people are looking at exchange rates longer term and they're doing longer term analysis, they're always taking into account the close prices. So that's what we're looking at here. This is the first break above this key resistance region that we highlighted since the start of the year. If we close above that, I'd maintain a constructive outlook. But again, from a scalping perspective, it becomes very hard to try to trade these pairs, guys. And again, really big range. So the one other thing I'll point out to you is you are getting divergence. Typically these divergence signals, one above the extreme, one below the extreme, tend to be pretty decent. So I'm a little bit cautious on that standpoint. Near-term resistance right around 94.30, 94.20, the upper median line parallel here. Let's see what the intraday chart looks like. Did we talk about this in the webinar yesterday? I think we did. So it was coming right into the opening range high of the week. And I guess we highlighted it with that circle there. It looks like we broke right through. So you were constructive above 91. All those topside targets got taken out. Above here, again, no man's land, guys. When you head into highs, lows you haven't seen in years, I typically won't really be a scalper of that position. More so, if I'm holding anything left from the long here, I'm just bringing up my stops. I won't really look to book targets in the near term. But yeah, great guys, great pairs you're bringing up here. I just want to note that all the last three that we looked have all been sterling pairs, and we're heading into the BOE inflation report tomorrow morning. So keep your expectations trimmed on that account, okay? Because you could get a lot of volatility on that release. Tuttle says yes. Got a nice trade from the pullback yesterday. I mean, this was a nice move. This was a very nice move, and this was a major high. You have a very clear-cut stop against the previous highs for the year. On a trade like that, sure, I'm sure you got a really nice, compelling short trigger in momentum on the 5-minute on a move like that. But remember, we broke the opening range. So we're looking for that Thursday, Friday high stretch, and we're probably likely going to get it here in Sterling CAD. A pair, by the way, which typically gives us really nice opening range breaks. Here's one weekly opening range break back in early February. To start off the month, here's the break into this week's opening range. Now, that one quickly recovered, but remember, that was a lot of event risk on tap. So it was the huge dollar sell-off that we saw really suddenly, gave this thing a jackknife to the upside. But long story short, the opening ranges typically work very well here. Very well. Pooja says maybe sterling yen on the downside too. Tuttle, you're more than welcome, man. I appreciate that. Sterling yen. Ooh, not yet. Maybe very soon. Maybe very soon. Guys, remember we talked about this one here yesterday? Okay, so we made it through that first initial target, which was 85.60. The second one was this region right here. Pooja, I do think you get a play on this. It would coincide really well with that dollar yen that we're talking about. If dollar yen holds that 118.90 region, you maybe get to see another spike higher, but if it turns around U.S. trade, that's yen strength. If the pound does experience a pullback, specifically with all those pairs that are breaking out, I'm a little cautious on trying to fight it, but I do think we could still stretch into 84, 183.90 would be the bottom end of that range. You got the 618 at 84.20, the R1 monthly pivot, and a longer dated 50% retracement, all just above that trend line. So you could see a scenario where this thing spreads or stretches into 60, then moves lower, giving price a stretch right into that region of resistance, then pulling back. It'd be a classic sterling move. I mean, look at their support, guys. We stayed constructive to open up the month above 76.28. If you were trading that intraday, you got faked out twice on the first start of the month here with both probes going well deep into that 76.28 level. So it's just classic sterling style, and I think you could get that stretch into 40, into 84 rather before it turns around. But Pooja, I'm with you. I'm looking for some sort of major resistance here near term as well in sterling yen. Maybe to later tomorrow we can discuss fibs in general. Thanks. Eileen, yeah, feel free to throw out your questions. I am over on time. Eileen, your question was, can you talk about where you decide where in price, like how far back to draw your fib retracements and extensions? Yeah, Eileen, bring this up tomorrow. I'll give you a quick breakdown of it. But here's the thing you want to keep in mind with fibs, guys. We always need to take account major key highs and lows. And it depends on what the level of magnitude of the analysis that you're doing. So if you're looking at a 30-minute chart, I'll be looking at highly weeks or lows. I'll be looking at essentially highly weeks and lows or major key highs and lows, monthly highs and lows. But you're always measuring the inside of the move that you're currently in. Okay, so if I'm within this decline here, it's obvious that we're going to want to take this retracement. Within the confines of this retracement, an extension off this low will give me the topside targets of this move. It really depends what you're measuring, Eileen. And we can go into a little bit more detail on that tomorrow. Guys, I'm over on time, but thank you so much for everyone who's attended. We'll keep this running. I'll keep you updated on the Squawk feed. And again, we'll pick things up tomorrow morning at 8:30 Eastern. Hopefully we'll have some more of these plays in, or some more of these trades in play. We'll also go over the aftermath of the BOE quarterly inflation report. We'll see if that shakes anything up on all of these sterling crosses that we've covered in such depth here today. Guys, best of luck trading, and I'll see you all bright and early tomorrow morning. Cheers.